Okay, good morning or good afternoon, and welcome to our webinar titled 5 Payment Trends Too Big to Ignore, Expert Advice for Global Growth. My name is Melisande Mouval, publisher of the papers, and I'm delighted to be the host of this webinar today with our partner Rapyd. And thank you so much for joining. It's great to see so many of you tuning in today. So what's the story? Well, despite the current global economic landscape, 2023 still offers a great deal to be excited about when it comes to global fintech innovation and growth opportunities. From embedded finance to multi-currency treasury solutions and faster payment networks, today we will discuss key fintech predictions and explain why continued investment in global payment infrastructure will allow companies to seek new growth and revenue boosting opportunities in 2023 and beyond. So before introducing the speakers, I would like to start with some quick notes regarding housekeeping. The discussion will take approximately 35 minutes, and we will have 10 to 15 minutes for a Q&A at the end of the discussion. On the right side of the screen, you can see the chat panel, which includes a chat room and a Q&A widget. You can use that Q&A widget to ask questions at any time throughout the discussion. We will compile your questions and the speakers will take as many as possible at the end of the discussion. And I would also like to point your attention to 3 valuable assets developed by Rapyd that we added to the handout section also on your right. It's the just released Future of Fintech ebook, the State of B2B Cross-Border Payments, and a must-read blog by David Rosa. So today I'm joined by David Rosa. He is General Manager of FX Wallets and Payouts at Rapyd. Joel van Aarsdale, Managing Partner at Flagship Advisory Partners, and Eyal Shohet. He is VP Payments and Fraud Prevention at Tango. So David, Joel, and Eyal, it's very good to see you. How are you today?
Good. Thank you for inviting us.
Yeah, with pleasure. And David, maybe you can unmute yourself.
That would help, wouldn't
it? Lovely to hear you as well. So David, Joel, and Eyal, maybe you can tell the audience a bit about yourself, your role, and your company. David, could you start?
Sure. Thank you, Melisande, and thank you for having us here today. Very excited to be part of this panel. So David Rosa here. I'm the general manager of a business unit at Rapyd that looks after the foreign exchange, what we call wallets, as well as the payouts for our customers all across the world. By background, I am a banker as well as an entrepreneur. In fact, I joined Rapyd by selling my company to Rapyd. It's a very interesting way to join on a mission that we call liberating global commerce, which is really very, very aligned with what I started my journey on, because at heart, what we do at Rapyd is removing the pain point for businesses that need to grow internationally of having the need to open a bank account in each and every country they want to grow into. Instead, what we offer is one single API that allows clients to collect money or disperse money anywhere around the world. So very much looking forward to the session today, and look forward also to answering any questions you may have.
Cool. Thank you, David. Joel.
Yes, good day, everyone. I'm Joel van Aarsdale. I'm the managing partner of Flagship Advisory Partners. Flagship is a strategy boutique consulting firm that focuses purely on payments and fintech. And we advise clients around the world on growth strategy development and also on mergers and acquisitions.
Lovely. Thank you, Joel. Eyal.
Hi, everyone. Thank you for inviting me. Eyal Shohet, I'm the VP Payment for Tango. Personally, I'm doing payment for the past 18 years, I think, since they've introduced the CVV. Now I'm heading the fintech division of Tango, which is a social live network for broadcaster. Here we go. Where we operate a platform which connect between viewer and creator, which enable the creator to exploit their talent, their ability, and viewer to come and support them. We have something like above 10 million monthly user, 1.5 million daily user, above 500 million already registered user. We are #1 Western live streaming platform in the world. We are operating, and this is what I'm trying to do the best we can, real-time fast pay-in and payout for our user, which is basically the economy of Tango, where we have viewers that come and support their creator and enable the creator earn their living. If I will assimilate it, think about the artist at the corner of the street that is performing, and people are stepping by, engaged by the sensitivity, by the emotion, and get in touch, and they want to support him with what he's doing. This is what we have taken online and do it on a global scale, enable creatoring around the world, having viewer from the other side of the world, with having the street corner on the net. We are operating over mobile in both App Store and over the web. Happy to be here and participate. Thank you.
Yeah, thank you, Eyal. And I would definitely, for the audience, have a look at Tango. I had a look and saw some amazing artists, whether they were singing Indian songs or making music. It's really fascinating. So thank you. So we are really happy to have years of payments experience in this panel and to give you some different perspectives from both a gig platform like Tango, a payments provider, Rapyd, and a renowned boutique strategy consulting firm. So don't be shy and do reach out to the speakers. They would love to take your questions. So what's on the agenda today? We will discuss fintech as a service and the gig economy, embedded finance, treasury solutions, payment networks, and virtual cards. But before we kick off our discussion, we would like to know from you, and here I would like to launch the poll question: which of these trends are the most relevant to your business? Is that fintech as a service? Is that embedded finance? Is that multi-currency treasury solutions? Is that real-time payments network or virtual cards? So let's give the audience a couple of seconds to respond to this poll. What would you expect, David?
I think real-time payments should feature very highly on the votes. No pressure. It is, as we're going to be discussing, one of the hottest topics, I think, these days. Everything is moving to real time. So why isn't money moving real time already?
What do you think, Joel?
I would say obviously embedded finance is a key topic for a lot of our clients, certainly, that are either, fintech companies or many of our clients are not fintech DNA companies, but have fintech as a vital element of their growth strategies.
So real-time payments, embedded finance. Let's have a look at what the audience says to this poll. So it's interesting to see that 23% fintech as a service, real-time payments 31%, embedded finance 17%. So yeah, it's pretty close. I don't think this comes as a surprise. So let's move on. And let's start with the first topic, fintech as a service. David, the gig economy has ballooned in recent years. What do payment managers in this particular vertical of the gig economy expect from their payment partners?
Sure. So look, first of all, fintech as a service, by the way, was a terminology coined by Rapyd, right? So we actually were the pioneer in this space, and it doesn't only apply to the gig economy, but very clearly, as you highlighted, the gig economy has really proven to be a great product market fit for this service, which again, just to remind everyone, is basically delivering an extremely complex cobweb of banking rails, card rails, wallets, even cash in one API, right? So really making it very simple to interface with this. And in the context of the gig economy, let's take a quick step back. So this is very much this super trend of the remote worker. Yeah. So we had this already happening prior to COVID. COVID really cemented it. There's no two ways about it. And really what we're seeing is, we think when we hear gig economy of freelancers, content creators like, our friends at Tango clearly are really dominating in this space. But also on the B2B side of things, we have this concept known as the employers of record. And what really fintech as a service unlocks is this very big pain point of dealing with multiple layers of stakeholders. So if you have, these days you have platforms just like Tango, for example, that are in the market that then not only have their own needs, but have clearly and serve the needs of their clients that may be businesses, maybe individuals. And there's a whole hierarchy, if you will, of how the funds flow. We call these wallets that the funds flow through. These wallets have a very important compliance aspect when you onboard, whether it's a merchant or a sub-merchant or even a sub-sub-merchant, it gets quite complex. There's an element of compliance, but also there's an element clearly of the flow of funds that need to be orchestrated, all ideally in as close to real time as possible, in different currencies, many different currencies, in fact, because let's not forget at the end of the day, what you're doing, what you're solving for is for an individual to get paid a salary, a fee, and that is typically their lifeline, right? So it really cannot be delayed. And all this complexity really is then solved via this one API that makes the life of ultimately these platforms to then go and orchestrate all this complexity out of one endpoint. So this is really proven to be a great product market fit for ourselves, and I think for the industry in general.
Yeah, so you mentioned a couple of things like foreign exchange, the SWIFT payments, all these features that are key for the gig economy. Let's talk a little bit more about embedded finance as well, which is also part, I guess, of the fintech as a service offering. And Joel, there's still some misconceptions sometimes of what this means, this embedded finance. How do you define this concept?
Yeah, look, at a basic level, embedded finance is just the act of integrating financial services into other products and use cases, and technology really being the key enabler for doing so. And when we look around the world, what we see in terms of progress of embedded finance is clearly payments is the front runner and largest product and use case. And oftentimes, for example, payments being integrated deeply into software or deeply into marketplaces, for example, as use cases. There's also very interesting use cases associated with banking or card issuing, for example, and also lending. Those use cases, I would say, are somewhat more nascent than payments, but certainly coming on strong. I mean, I do think what we've learned, I think, in 2023 is that the potential for embedded finance is not completely limitless. I think we can all look around and realize that we only need so many financial services relationships, but it's still very underpenetrated globally. And so, there'll be many years of growth on the basis of the tailwind of ongoing penetration potential of both payments, but also banking services, card services, and lending.
Yeah, fascinating. And can you describe a little bit like the different roles in this ecosystem?
Yeah, so there's a lot of terminology, obviously, that comes along with embedded finance, but the way we tend to think about it is there are clients of embedded finance, which are generally the platforms, into which financial services are being integrated. There are the suppliers of the financial services then, which are generally fintech companies like Rapyd. And then there are, of course, the users, the consumers or businesses that are consuming those financial services within their integrated use case. And I think, clearly the clients, companies like marketplaces or platforms like Shopify are really thriving on the basis of the huge monetization potential that comes with financial services, but also the great use cases that you can create. You can reduce a lot of friction with a really strongly embedded financial service. And then, of course, I think we can all individually testify to the convenience of app-based commerce. with a vital component of that app-based commerce being payments and other financial services.
Yeah, thanks, Joel. And in this sense, it's also interesting to refer to a recent survey that Rapyd did among, 900 consumers in the US and in the UK. It was May this year, where they found out that 40% of Gen X, millennials, and Gen Z are open to financial tools from their favorite brands. So I was wondering, that's the consumer part of the equation. How does that work for Tango, Eyal? What embedded finance solutions does Tango offer, and now, and what are you planning to offer in the near future?
So in Tango, basically, as we are the marketplace where we meet between viewers all over the world and the creator, which can be on the other side of the world, and we need to facilitate for them as faster as we can, frictionless, with no hassle, the gifting that they being exchanged between them. So the challenge for us is so many different currency that the creator in India can receive from Colombia, and think about the currency that is being moved. We need to be able to let the viewer pay as fast as they can in whatever currency, whatever payment option and method is having, either by card, either by pay by bank, either by wallet, either by voucher. All this need to be fast as we can, going over the challenge of the cross-border boundaries, and facilitate the FX exchange. At the end of the day, the creator will receive his earning, his salary, in the currency that he wants. And for us, if we take it to the other side, and how we can disburse all over the world to the creator in their own means of payment. Again, it can be a bank, it can be a wallet, it can be a card, it can be a virtual card that we're going to touch it later on. So many other payment methods that all this we need to orchestrate to work together to do it as fast as we can. Because if you think about when he finishes live streaming, same as the guy at the street, when he take out the hat with all the money inside, then he want to feel it and have it at home as much as we can. For us as a marketplace, in terms of future and potential to use embedded finance, there are many in our vision where we can go. As we know about our creator, the frequency that he's using, we know his operation, we know his client, we know the time that he's doing. Based on AI usability, we can anticipate what will be his future earning. Based on that, we can issue short line of credit because we know what he's going to do next week. And we can help them and facilitate and give them the stability and the assurance that they have a future on our platform. And on the long run, even we go further, is really having a guarantee, monthly salary, and even kind of a pension plan. Although that, because the platform enabled them spread around their talent and all the time meet new viewer that passing there in the corner of the street and gifting them.
It's fascinating. So you're basically leveraging the data that you have on the artist, and based on then in the future you would be able to offer them more financial means, pensions, and in that sense create more stickiness to the platform you offer. It's great, cool. Joel, you talked about platforms and SaaS companies earlier, and you advised them on implementing embedded finance solutions. What lessons did you learn, or did the companies learn that you advised?
Yeah, I think probably the key lesson, or rather the pitfall to avoid, is just to have focus, meaning you really want to crush one use case before moving on to the next, for example. Mm-hmm. I think the common mistake we observe with some of our clients is that they try to pursue too many use cases, too many embedded finance products simultaneously, even across different geographies. And when you spread yourself too thin, I think it tends to really dilute the outcomes and the results that you get. And so our recommendation would be to really master one use case, get it scaling, get the money coming in before you shift the focus of the team to the next product and use case, for example.
Yeah, makes sense. Let's move on to the other one, multi-currency treasury solutions. Joel, this is another key trend. What is driving this need for multi-currency treasury solutions?
Yeah, I mean, we're seeing fintechs really do very well, of course, in cross-border money flows and related FX services, and that's a function of several things. One is that cross-border commerce, mostly digital commerce, of course, continues to grow at a very high rate, roughly 2x the rate of growth of domestic commerce. The second thing are, of course, gig economy as a catalyst of demand. Gig economy flows also continue to grow at roughly 20% or so, many orders of magnitude higher than the macroeconomic growth. And a third reason is that actually the supply of cross-border services from banks has really pulled back over the years. Banks are actually consolidating their geographic footprints and looking to minimize their more global footprints, and even actually partnering with fintechs rather to achieve those more global services. And so fintechs are really, filling in on what is a dwindling supply from traditional banks, while you have correspondingly an acceleration in demand. And so that's created ideal circumstances for successful fintechs to grow at very high rates.
Yeah, I see David nodding, being an ex-banker. David, you mentioned before the ease of foreign exchange is one of the key requirements for the gig economy. What challenges are payments and finance managers are facing?
So I think in general, in a world of interest rates that are no longer at zero, very clearly, money needs to move in faster than ever. Yeah, because the opportunity cost of having money sitting around and not earning a return is very big. So moving money at a faster pace in the context of we're talking about multi-currency treasuries, right? So what is a treasury? Let's not forget, in the context of a company, this is your in-house bank, effectively, right? Mm-hmm. Role of the treasurer basically is managing cash, making sure that the right amount of money is in the right place at the right time in the right currency, okay? And this is one of the challenges that we're having because, yes, real-time payment system, we will talk about this a lot more, are really growing exponentially. More than 60 jurisdictions now have real-time payment systems, but they are domestic. So really the ultimate solution is to wrap these real-time payments that are happening in parallel in all these jurisdictions via a real-time foreign exchange solution, right? So this is ultimately the package that a multi-currency treasury solution really brings, and what it's aspiring to become is everything becomes real-time.
Okay. And I would like to get Eyal's perspective here as well. If you would look into sort of your, key concerns, and if you are choosing a fintech partner, what capabilities and features do you value most in a partner?
So a fintech partner is highly important because at the end of the day, we all talk money. People are coming and trust us to provide them the best service they can because this is their earning. So first of all, of course, price and cost is always matter. But the other factor that are highly important, there are several. For example, the ease of use for us internally to work with the partner, the ease of information, the operational performance, the feedback and the feedback that we receive, SLA for support, how they come up in case of incident, and incident do happen. We try to avoid them. It's happened, so it's a big issue that you get the good support. Analytic and reporting, it's only highly important because at the end of the day, it's nice that we registered money, we promise money from each other between the viewer and the creator, but then we go and we spend half a week of just doing reconciliation, don't finding the transaction that were paid or not paid. Suddenly we find a bizarre currency exchange, highly strange. All this is a big hassle, and a good, reliable partner, a fintech partner that can provide us, it's highly important. And I think at the end, also the important is how much it is flexible, innovative, to grow up and change with the new economic that is happening.
There is innovation. You ended with the innovation part is of course key, but one of the other factors you mentioned is basically how you work with your partner, the flexibility, the service they offer, communication, and of course the performance and reliability. Thanks, Eyal. Let's talk a bit about the topic that we referred to a couple of times already, the real-time payments and the importance of this for innovation in this business, but also for the gig economy. Eyal, maybe you can elaborate a bit more on this, on the need of real-time payments and why that is so critical in the gig economy.
So first of all, gig economy is, I think, it's made from the same fabric of real-time payment. This is like the new stage. This is the new phase, the new area where we are entering. The real-time payment, if I will go to the legacy payment that we know, so in the past year, we found out there is a possibility to exchange money between person in a fast way, which you don't need to wait a few days to receive the money. I will explain. Suddenly, inside India, person can change money between themselves in second, while before it, we need to wait for the bank transfer to be processed, maybe even manually, and when someone then allocated the fund and you are waiting 3 days to get your money. Real-time payment provides us to deliver value cross-border as much as we can. This is the challenge, but as long as we can, we bring value. So gig economy, we are talking about short period or short remuneration, and for people having the opportunity to do a job and get their money fast, and now in their currency, in their country. Having a real-time payment enable us as a platform to give this service to them, get their trust, get the reliability, and growing up together with the fintech possibility and enable again to another activity in the gig economy to happen.
Yeah, so it's a key feature for your gig workers and to basically have them basically create stickiness, and also that they trust you as a partner, that they get the funds so as fast as possible. You mentioned cross-border is a challenge. So I was wondering, David, how do you enable this local and cross-border real-time payouts to these gig workers? How do you do that?
So it is all about the network, as it were, and the ability to be compliant in the jurisdictions where not only you deliver the services, but where also you onboard the clients. Mm-hmm. And this is where there is a major competitive advantage, I think, from the fintech industry, and I mean the non-banking industry, because, let's face it, normally this would be the banking, traditional field, right? And so why are banks not really wrapping their head around this type of opportunity? And this is because we touched on this earlier, right? Like banks typically have reined back their businesses from a global scale. There's only a very few global banks typically, targeting much larger type of clients, right? Simply because the smaller clients don't make enough of a return, and it's a very expensive type of client base for them to service. And the fintech industry manages to have a much lower cost base because the licensing regime that it has is a more junior licensing regime. So it cannot go and deliver the full gambit of solutions that banks deliver. But it's actually more than good enough to go and serve this type of clients that have these pain points, right? So in other words, we can be a lot more global than a traditional bank because we're not a bank, and yet we are regulated, but sure, in a more limited manner. But in terms of moving money, collecting, disbursing all around the world, it is compliant, right? And it is actually a very robust system that in many ways the European model, I'm going to call it both UK and the continental European model, is being adopted pretty much around the world, perhaps apart from the US, which is really still a challenge in terms of the different states looking at the things differently. But the opportunities in the emerging markets, clearly, right? Because this entire gig economy, the remote worker concept is very prevalent in these emerging markets. And so this is the exciting part, and the ability to move faster at a much lower cost is really what gives the fintech industry the competitive advantage, right? And then again, how we overcome these challenges, that we're able to tap into these real-time payment systems that are, again, domestic in a particular local currency, but then we marry a foreign exchange element, and hence this treasury aspect to it, if you will, that then brings everything together and creates an end-to-end experience that is increasingly in real time.
Great. Let's move to the next and the last topic and the trend that we discussed, which is virtual cards. Which is booming as well. And I was wondering, Joel, what is driving this growth of virtual cards?
Yeah, virtual card volumes are also growing at a little over 20% last I checked globally. And that growth is really being stimulated by a number of different use cases. So virtual cards are widely used, for example, for payouts in the accommodation and travel industry, also on the purchasing side, if you're a corporate traveler. They're widely used, for example, to pay gig economy workers because they're quite dynamic in terms of what you can do with a virtual card, meaning you can not just move funds from point A to point B, but you can actually give the seller or the gig worker an instrument to then help them transact on their end. It's also being driven more so in the US than globally, but by B2B payments and the linkage between procurement and purchasing and ultimately the cash flows that come thereafter. We also expect that as a use case to be proliferating more globally looking forward.
Yeah, and Eyal, how do you leverage the virtual cards within Tango?
For us, virtual cards, it's a very good and amazing tools to disburse fund to our creator. If you think about it, in order for them to receive fund, they need either to have a bank account, they need to have a wallet, they need to have some kind of tools that can hold the fund. And by issuing a virtual card, we give them the tools and give them also the means how to use it. So we can issue the card, they can load their funds per their earning, and then they can use it and tap and go using the mobile by putting the virtual card inside the phone, and the phone like replace the regular plastic card, and use it to pay online, use it to pay in the tube. Suddenly you don't need to have like a bank account. We can issue people all over the world the easiest and frictionless option to earn their money fast. And there is even advantage in the currency exchange, because we can issue like in US dollar, and then they can make payment in US dollar without even the need of paying the exchange rate. So the virtual card is an amazing tool. On the corporate sides, there is already, it's well popular, corporate company using this virtual. I personally now travel in for Money 2020 using a virtual card, really, that cover all my expenses. It was great. And we want to take this corporate level and disburse it all over the world to the creator. It's a very good and to facilitate payment for us anyway.
Yeah. Anything to add here, David?
Not much, in the sense that, again, I think I would just complement what has been said by the fact that there is not only the ability to have the issuance of the virtual cards, but also you can move money on the card networks as well. You can do payouts to cards. So the moment actually an individual, maybe a content creator, a freelancer, has a card, he or she can get paid on the card itself by other people as well. So it becomes almost like a replacement of a bank account, right? So it's really adding flavor. Again, let me repeat the same word that I've used many times now, in real time, because the card networks are real-time networks, and they are global, cross-currency. So it's really like creating a parallel world, typically in more retail size. So the volumes are not, typically B2B. The big volumes are in the number of transactions that happen. So the transaction amount on average is smaller, but it really solves amazing pain points. So I would agree with Eyal, it's a transformational part of the toolkit these days.
Great, thank you, David. And what I would like to do is thank both you, David, Joel, and Eyal, for sharing your perspectives on key global fintech innovation and growth opportunities for merchants, and to really unpack these 5 trends for us. Before we go to the Q&A, and we have some questions from the audience, so thank you, but feel free to send in more if you like. We will address as much as we have time for. We have a last poll question for the audience, because we would love to know what other topics you would be interested in hearing about in the upcoming webinar. Is that cross-border and B2B payments? Are these emerging markets? Account-to-account payments, omni-channel commerce, pay by bank, or payments localization? Thank you for now. So cross-border payments, emerging markets, omni-channel commerce, pay by bank, and payment localization. Thank you. So let's kick off with the Q&A. First question. How do you balance the risk of instant settlements and fraud and AML checks for the gig economy? David or Eyal, who would like to take this question?
Sure, I can start with it. So thanks for the question, very relevant. I just want to go back to some of the comments I had earlier, that to design and orchestrate these entire cross-border multi-currency treasury solutions, there is a relatively complex hierarchy, right, of how the funds flow. They flow typically through what we call wallets at Rapyd, and those wallets are KYC'd or KYB'd, so there is an onboarding due diligence that happens, whether it is a business or indeed an individual. But that's clearly not where it stops. There is what is known as transaction monitoring that is happening. And this is where the real challenge happens, because as we mentioned, everything is real time. So how do you stop things in real time? And you need to have really very clear typologies in mind, whether non-typologies. So you are constantly looking to connect dots. So there are, without getting too geeky in this topic, but there are what we know as, on the one hand, fixed rules. So these are known typologies that we know fraudsters or basically financial criminals in general are trying to attempt on the system, because let's be candid, right? There is no one in the industry that can say that their KYC or KYB, as in the onboarding due diligence, is bulletproof. No one can say that, right? The best fraudsters, by the way, pass those tests relatively well, in my experience, in over 20 years in the industry. Where you can catch them really is on the monitoring. And so there you have these on the one hand fixed rules, which is more the old school. And then increasingly, though, a lot of people really talk a big game, but they don't have a lot under the hood, is more predictive analytics on what is likely to happen next, right? So more AI, of course, and then we're now in a mega bubble about AI, so clearly expect more of this noise to happen. The reality is this, in my mind, is that the entire compliance governance that the industry is really following, at least the credible players in the industry, is a risk-based approach, right? So first of all, you need to start from the fact that you're not going to catch everything, but you need to have clearly a very, very robust governance around it, and again, continuously improving. let's not forget, in the context of gig economy, that we're talking about really small amounts, right? So the problem that I'm constantly seeing in the world of compliance, and I'm sure we have some compliance specialists in the audience, is that they try to solve for the 1%, right? The 1% of crime that happens. How about solving for the 99% of people who have pinpoints and want to make a living, right? This is what really progress is about. And unfortunately, I think we still have the majority of the older school, particularly so in my older industry in the banking world, that are stuck. Let's solve for the 1%. It's the wrong way of going about it. How are we going to make the world a better place if we go like this, right? So let's solve for the 99%, focusing clearly on having very, very robust governance, but also helping solving pain points. Because if you continue focusing on the very, very, very small minority of people trying to do bad things, you're never going to innovate. So that's my answer.
Clear. David, thank you. The next question. For the fintech as a service for gig economy, how do you manage cross-border payments and settlement compliance requirements for the card schemes and regulators? David, could you take that question?
I'll take that one again. Sure. So there are different rails that the money moves via. So we talked about real-time payments. These typically are what are known as banking rails, so the clearing schemes that basically the membership is not only banks, also non-banks, fintechs, but they're traditionally known as the banking rails. And then the card rails, which are very, very active, as we discussed, whether it's issuing the cards virtually or doing what's known push-to-card transactions. This is another method that at the end of the day, for the specialist in the audience, yes, they do run eventually on banking rails, but they are parallel worlds for all intents and purposes. So they have each and everyone have their own governance, their own regulation. Regulation typically on the banking rails is a local jurisdiction-based regulation. So you need to abide by the regulations of the local jurisdiction. The card rails are more global, right? The Visa, MasterCards have scheme rules that are very clear. They, by the way, expect and it's a must to be regulatory licensed to become a member of direct member of these schemes. So there is a prerequisite to be in a position of having this very robust governance, right? Not only again at the onboarding, but increasingly so on the monitoring side of things. So frankly, these days, especially when you're global, and I can speak for ourselves, you don't really differentiate between the governance that a bank would have, and I'm talking about a global bank, and there's less and less of those, and a global fintech. It's the same level of hurdle, if you will, whether it is for these clearing schemes that are the banking rails or the card rails. There's no real differentiation. So by this I mean that, although it's fair to say that in the early days it was the case, fintechs were the easy way because fintechs were taking shortcuts. That's no longer the case, right? If you're really serious in the market, you need to play by the rules of the game and be member of quote unquote that club. So you need to have not only the processes but also the people with the experience, having seen going wrong, things going wrong in multiple instances, and make sure that you surround yourself, whilst again, let me repeat, keeping a commercial mindset and looking for growth, looking for solving pain points. Because again, if you only look at the downside, you're not really going to make much progress, right?
Joel, did you want to add something into this question, or?
Yeah, regulators have this interesting catch-22 when it comes to a topic like this, because on the one hand, they continue to escalate their requirements around AML and KYC, but they also want individuals coming into the formal economy and the formal banking system. And so, when you can progress individuals or workers to move from the informal and gray economy into the formal economy, as a regulator, you're obviously quite happy with that outcome. But one sort of contradicts the other to some extent. And so if you make the regulatory walls too high, then you're going to really dampen the stimulation of the formal economy. And so I think regulators are not always great at understanding these kinds of balances, but that is the balance to be struck, which is, as David was describing, especially on these kinds of relatively small transactions and jobs, I think you would ideally have some bias for stimulating the economy rather than prohibiting it, but it's it is a bit of a catch-22 if you're a regulator.
Yeah, good point, Joel. Another question, again, fraud and money laundering. So how to limit fraud and money laundering when virtual cards replace bank accounts without the required EML checks, etc.? Joel, David, who would like to take that one?
I mean, we certainly observe with our marketplace clients, for example, that actually it's not unusual if the act of paying out, in fact, is riskier than the act of collecting payment on the way in. And part of the reason is that actually the payments industry has done a reasonably good job of building out, fraud tools on the pay-in side of transacting, but actually not a particularly good job of building out such tools on the payout side. And so if you're a marketplace or a fintech enabling marketplaces, you've got to do more customized work to validate identities, to manage identities, to detect patterns, and to stop payments before they go out the door. But it's definitely a less mature part of the fintech marketplace than the pay-in side. And so there's work to be done there, and certainly there's lots of fraud rings that find these points of vulnerability and take advantage of them.
David, anything to add here?
I think that was actually a really great answer, and perhaps just to illustrate this, right? I ultimately, I think, can be the classic example of how the fintech industry is going about it. Look at me, I'm a banker by background. I have been used to the governance, to the processes, to the mindset as well. In the early days of what is quote unquote best class best in class in this field. And then moving on to what used to be the darker side, which is the fintech and the entrepreneurial side of things. We try to disrupt the industry. But here I am, right? So, and I don't think I'm the only one. I think if you look at the largest players in the fintech space globally, you have increasingly people who are, I think, credible, right? Forget me for a second. In general, look at it. I think the fintech industry has been able to, because it's been solving pain points and basically either been making money or been able to raise substantial amounts of money, then surround itself with talent, right? And talent is driven away, by the way, from these institutions, because at some point, if you keep on, again, trying to choke things, then people don't really get excited about the career prospects either, right? So I think in general, you're absolutely right. The payout side of things, particularly, again, because a lot of it has been on banking rails traditionally, has been the space of banks, and fintechs really were not on top of it. But now that's no longer the case, right?
Yeah, great, David. Another good question, I think, is about sort of expansion. What would your recommendations be if you're looking to expand your fintech services internationally? And how do you analyze where to expand, including pain points and benefits? David, Joel, Eyal, who would like to take this question?
I can comment for us, for example, when we look at globally and we're looking for new markets. So I'm looking for the right fintech partner to facilitate for me the payment rails inside this market. So, for example, if we go to Brazil, so it is absolutely necessary to have the PIX, the rapid payment system. And if I go to India, we need a UPI. So, and all these are new fintech solution which will not exist like a couple of years ago. And think about it, if you want to connect between a viewer in Brazil paying by PIX and the creator in India want to receive the fund, and we have here BRL fund changing to INR, and it needs to be as instant as we can, because think about it, what we are doing here is actually an Indian tourist and the guy from Brazil meeting the street corner and exchanging between themselves the funds. So having the good rails, having a good partner, having a good facilitating the operation by itself, and providing a frictionless service to the viewer and the creator. This is like I think this is the holy grail. This is the secret sauce to succeed.
Joel?
Yeah, look, I think if you're a fintech looking to globalize, I think you need to understand sort of who you are and what you're looking to solve for, right? Because obviously, there's a hard way to globalize, meaning highly localized. For example, getting your own license, getting your own connections into the networks, and then there are easier ways to localize, meaning that you can do more basic use cases. But for example, you're leveraging partners who are the locally licensed and connected providers. And so I think if you're a fintech, it comes down to having the right operating model where you're leveraging partners where it makes sense, and you're only building and owning the full infrastructure when it makes sense, meaning when you're going to have the appropriate scale. But oftentimes you don't need to be doing the full value chain, if you will, to enable the product use case that you're looking to stimulate. There's great supply of partners that can do these things for you in today's market.
Thanks, Joel. You talked about UPI, PIX, Eyal. We talked, and there's of course instant payments in Europe. What is the panel's view on interoperability between all these domestic instant infrastructures? Who would like to go first? David?
Okay, I'll go. Look, very, very relevant and hot topic. So thanks for the question. What we're seeing is not only fintechs trying to really put those around a very fast-growing phenomenon. Again, just to remind the audience, there are over 60 jurisdictions and growing that are now live with real-time payment systems around the world, right? Out of 200, if you round it, right? So we're almost a third of the world that is in real-time payments, and a lot more so if you look at the real economies, right, that are moving a lot of money and having meaningful GDPs. You also have the governments, right? So as I mentioned before, a real-time payment system is a domestic proposition, typically, yeah. And what you then have that has really come to the fore in the last 12 months or so is this multilateral kind of projects that governments have been putting forward. So you have some really interesting move. Recently, one that was advertised very widely was Singapore and India that basically linked their fast payment system with the UPI. And so again, in the use case that Eyal was mentioning, that's what the governments of both countries are trying to facilitate. We're not at the level where India and Brazil is there, but I think that's the direction of travel, right? Now, the challenge is, I think, twofold. One is that this, if you look into the nitty-gritty, and maybe some of you have already tried actually using this Singapore dollar INR, real-time exchange, it's really very retail oriented. So again, it served this gig economy, ecosystem really, really well. But when it comes to B2B, there's limits. And by the way, those limits are in place precisely to govern the fraud and the bad actors. Okay, and it's totally in line with this risk-based approach that every single regulator typically will want to see be put in place, and it's normal, right? Like it's the nascent first steps of anything in finance. So yes, these multilateral movements are happening. We're going to see a lot more of this, I think, coming forward. It takes time. Governments don't move at the same speed as fintechs, right? But eventually happens. And yet we're going to continue to be faced with this retail versus wholesale kind of concept. And I think I'll take the question to the next level, if I may. I think the wholesale aspect eventually is going to be taken out by these CBDCs, these central bank digital currencies. That's really where the ecosystem for real-time cross-border B2B payments are going to be happening, not so much in these multilateral real-time payment systems. So that's another area to what we're clearly, very much involved and doing a lot of research for this. So preparing, again, different speed, different time zone, but very much in tune with this. So I hope this gives you a context of how we're thinking about it at Rapyd.
Interesting is to mention these CBDCs as a potential, basically real-time infrastructure. What any other takes on this, Eyal, Joel, on the interoperability of these domestic and regional instant payments infrastructures?
I mean, look, these kinds of interoperability initiatives tend to take a very long time, of course. And so, that is to some extent the advantage of fintechs, like Rapyd sitting in the middle, because that's a lot of complexity that needs to be solved for. And as much as you'd love to have interoperability standards, it again becomes more political and again very slow. And so I think I certainly wouldn't anticipate globalization of these domestic account-to-account schemes anytime in my career, anyways.
It's not too optimistic.
Melissa, if I may add one more point on this, right? Because I think it's very interesting that that this inertia that we're talking about is at play. I've seen it myself. So of course the governments, in terms of letter of intent and everything, can align, and then you have the elephant in the room, which is like, okay, so we have these two domestic real-time payment systems that are going to be interoperable. Who's going to provide the foreign exchange? And this is where you need to have a private sector player that comes in. And if Bank A is playing, then Bank B is saying, no, they're playing, we're not playing. So we're not having this existential issue. We're just going for it. We provide our own FX via our own network. And so this is why the fintech industry is really running circles around this entire thing. Though clearly it's a big thematic and it does add value, right? It really solves pain points for obvious reasons we talked about today.
Yeah, thank you. And we are unfortunately at the end of the time of this webinar. So I would like to thank the speakers. I would like to thank the audience for engaging with us. And before we end, maybe you have noticed that the link for this payment prediction report doesn't work. Apologies. We will fix it. So you should be able to download this report via this link a bit later today, or at least tomorrow. So for now, thank you so much for tuning in today. What we will do is we will send you a link to this webcast shortly, and we will get back to questions that we did not have time to include in this discussion. Well, thank you so much, and hope to see you in our next webinar. Thank you. Bye-bye.
Thank you.
Thank you, David, Eyal, and Joel. Great.